Recovery and Institutional Adoption, 2019-2020. The long shadows of the 2018 crypto winter did not mark the end of the cryptocurrency dream. Instead, they became a crucible in which the industry's future resilience was forged. By 2019, the worst of the panic had subsided. Prices remained modest compared to the 2017 highs, but confidence was gradually returning. Developers kept building, communities kept learning, and institutions, once skeptical, began dipping their toes into the waters of digital assets. This period became known not for explosive hype, but for steady recovery, consolidation, and the quiet birth of innovations that would later transform the industry. The slow price recovery. In early 2019, Bitcoin languished around $3,000, $4,000. Ethereum hovered just above $100. Most altcoins remained shells of their former glory. Many outsiders believed crypto had died, but those who had lived through cycles before knew better. In April 2019, Bitcoin suddenly spiked above $5,000, marking the beginning of a gradual recovery cycle. By mid-2019, it even touched $12,000 before correcting again. This pattern, steady accumulation, sharp rallies, followed by healthy pullbacks, signaled that market maturity was forming. Instead of pure speculative mania, there was cautious optimism. Consolidation of the industry 2019 saw a cleaning and strengthening of infrastructure. Exchanges matured. Larger players like Binance, Coinbase, and Kraken expanded globally, offering more security, liquidity, and compliance. Custody solutions emerged. Services like Coinbase Custody and BitGo targeted institutional clients with professional-grade asset storage. Stablecoins gained traction. Tether, USDT, USDC, and DAI began to play crucial roles in providing liquidity and hedging volatility. The chaos of the ICO era faded, replaced by more disciplined, sustainable innovation. The rise of stablecoins. Stablecoins became one of the most important developments of this era. While Bitcoin was volatile and Ethereum powered dApps, stablecoins like USDT, USDC, and DAI provided a bridge between fiat and crypto stability for traders during volatility building blocks for decentralized finance. By 2020, stablecoins had become an essential part of the crypto economy, with billions in daily trading volume. Institutions begin to take notice. For years, institutional investors had dismissed Bitcoin as magic internet money. But by 2019-2020, attitudes were shifting. Fidelity launched Fidelity Digital Assets, providing custody services for institutional clients. Bakkt by Intercontinental Exchange, ICE, launched Bitcoin futures contracts. Hedge funds and family offices began allocating small percentages of portfolios to Bitcoin. What had once been a fringe experiment was now attracting serious players. The Bitcoin halving of 2020. In May 2020, Bitcoin experienced its third halving, reducing block rewards from 12.5 BTC to 6.25 BTC. Historically, halvings had triggered supply squeezes and bull runs, and this time would be no different. The 2020 halving coincided with an extraordinary global event, the COVID-19 pandemic. The COVID-19 shock and crypto's response. When global markets crashed in March 2020, Bitcoin also fell, dropping below $4,000 in a matter of days. Critics declared Bitcoin a failed store of value. But then something remarkable happened. Bitcoin recovered rapidly, regaining pre-crash levels within weeks. Investors began to see Bitcoin as a hedge against inflation, especially as central banks around the world printed trillions in stimulus. Institutional interest grew stronger, with Bitcoin now viewed as digital gold in a world of monetary uncertainty. The pandemic became an accelerant, pushing Bitcoin and other cryptocurrencies into mainstream financial conversations. The quiet birth of DeFi. While institutions were looking at Bitcoin, another revolution was brewing quietly on Ethereum, decentralized finance, DeFi. Projects like MakerDAO, Compound, and Uniswap began experimenting with decentralized lending, borrowing, and trading. Key innovations included automated market makers, AMMs. Uniswap replaced traditional order books with liquidity pools. Decentralized lending. Compound and Aave allowed users to earn interest or borrow without banks. Collateralized stablecoins. MakerDAO's DAI demonstrated decentralized monetary policy in action. In 2019-2020, DeFi was still small, billions rather than trillions, but the seeds had been planted for a future financial system that would rival traditional banking. Cultural shifts, from speculation to utility. The culture of crypto also evolved during this time. Less talk of get rich quick, and more about infrastructure, adoption, and utility. Communities focused on education, spreading awareness about wallets, security, and financial sovereignty. Crypto Twitter, podcasts, and YouTube channels became hubs of global conversation. Crypto was no longer just a fringe internet movement. It was becoming a global financial subculture. Key milestones of 2019-2020. Facebook's Libra project, 2019. Although it never fully launched, Libra, later renamed Diem, forced governments to take crypto seriously at a policy level. Ethereum 2.0 roadmap. Plans for proof-of-stake and scalability upgrades began to take shape. MicroStrategy S Bold Move, 2020. Michael Saylor S Company became the first major publicly traded firm to buy Bitcoin as a treasury reserve asset, paving the way for others. The stage for a new era. By the end of 2020, the cryptocurrency landscape was transformed. Bitcoin was back above $20,000, surpassing its 2017 high. Institutions were officially entering, with billions in corporate and hedge fund investment. DeFi had grown into a new financial sector, setting the stage for the explosive summer of 2021. What had started as a recovery from the ashes of the 2018 winter had now evolved into the foundation for mainstream adoption. Conclusion. From recovery to renaissance. The years 2019 and 2020 were a bridge between two worlds, the chaotic, speculative beginnings of cryptocurrency and its evolution into a legitimate asset class and technological frontier. This era showed that crypto was not a fad. It was resilient, adaptable, and unstoppable. With institutions on board, DeFi on the rise, and Bitcoin stronger than ever, the stage was set for the next great wave of innovation and adoption. The world was about to enter the golden age of crypto, where finance, technology, and culture would collide in ways never seen before.